What is up, hackers? Welcome back to another episode of Hack Crypto, where we hack all of our Web3 education. If you guys are brand new here, be sure to be subscribed for my fire videos. And on this episode, I'm going to be going over the Spot Bitcoin ETF and the approvals that just happened. I've talked about this for many, many months, if not years at this point, and we have officially been approved. The SEC just fought for a long time, pushing deadlines for them to approve. ARK Invest, the very well-known Cathie Wood's firm, put an application in many years ago, and it just kept getting pushed off. The Winklevoss twins were the first one over 10 years ago to put an application in for a Spot Bitcoin ETF, and it just kept getting rejected. Now, as of January 2024, we have 11 ETFs that have been approved, which is a fundamental improvement and change to the crypto ecosystem as we know it. Having been in this space for over 10 years now, I've seen every single gatekeeper out there mentioning every single detail to try and prevent people from coming into this space. It has been a remarkable thing to witness, a culture that is very much just pump. And the self-custody side of things is always been a bit of a hang up. And I say that from the perspective of a total crypto native that has been in self-custody for many years, the better part of a decade now. And I think that it was a huge hang up for Wall Street. It was a huge hang up for boomers, for people that were not as invested in the self-custody concept of cryptocurrency and that core value proposition, where they just wanted to move the numbers on their Fidelity account into an asset or a vehicle that had exposure to different price movements. And that is what a Spot Bitcoin ETF is. It is giving people exposure to the price movements of Bitcoin that is backed by the Bitcoin itself. Unlike futures, where futures are just basically futures contracts adjusting for the price of the future that you're making a bet on, it's not actually backed by those underlying Bitcoin. And that is the magic here of this approval, is when somebody's buying an ETF through one of these different vehicles, they're getting direct exposure to Bitcoin because it has to be owned by that entity itself. Now, with the halving block scheduled for roughly April 14th or 15th of 2024, what you're looking at is a supply shock on top of a demand shock right now that's happening with these ETFs, where you have people that are allocating all of these different funds of their portfolio to the price of Bitcoin, and huge sales forces, hundreds and hundreds, if not over 1,000 salespeople at these different organizations like BlackRock and Fidelity on the phones, hammering the phones on a daily basis all day, talking to people about this ETF and trying to sell it. Now, why would they do that, you ask? There are fees here, and there are fees of all these different ETFs. Many of them are waiving fees for 6 months, like ARK, and many of them are just trying to bring more people into the asset and the vehicle. So what they're doing is just waiving fees. But others, like the GBTCs or the Grayscales, have kept fees high. And I think that is a poor choice, poor move. Those are people that are effectively trying to capitalize on, their tenure in the space as the crypto natives that have been really moving the space forward. And of course, Grayscale deserves a ton of credit. They can have their fees high for a short period of time and make that money back from all the fees that they paid in court costs to push the SEC's hand to make this approval happen. But ultimately, it is a choice of the consumer. Like, are they going to sell that, get something cheaper? And why go directly through an ETF that has fees like that when you could go to Coinbase, get those assets themselves like Bitcoin or Ethereum? So the benefit for all of my crypto natives out there that are just banging the drum saying like, these are terrible for the space, it's an ill-informed way of looking at it, because it is giving a new group of huge proportions of capital access to this asset. And you can still go and buy it on exchanges like your Coinbases and your Geminis. You can still get direct exposure to that asset. Now there's just more vehicles for people to get access to it. And of course, there isn't the underlying custody that you would have on an exchange that you could withdraw the assets themselves to your personal ledger or Trezor wallet, but that is okay. The optionality is there for individuals that want to do that, that want to store it in a safe. And then there's the optionality for the people who just want to move numbers on a screen and they want to just move their Fidelity money from their IRA over into the ETF and pay minimal amount of fees and just have it tracking that spot price of Bitcoin. There is a world where both of these exist, and it is now a reality. And it's very exciting to see that happen after a decade of battles in court, ultimately leading to this decision last week. And it's a monumental day for everybody. I think the initial reaction from a lot of people is, good. I think there's a lot of motivation around having sales forces selling exposure to an asset that people are all excited about. And with inflation and with everything going on, people investing in gold and trying to hold the value of their money, they're looking at this new vehicle saying like, okay, well, let me just flick over 1% of my portfolio to this 5%, 2%, single digit percentages over to a new vehicle. So what I want to do now is jump onto a list of the ETFs that were approved and go through some of their numbers really quick so you guys get a chance to see exactly what I'm talking about and we can dive onto the site. Here are the Bitcoin ETFs. If we zoom in here, we can see the different amounts of fees. So Bitwise, as you can see, BitB, 0% fees for the first 6 months, up to $1 billion in assets. And then ARK, which is very, very well known with Cathie Woods just being such a great pioneer of the space. ARKB is 0% for the first 6 months, up to $1 billion in assets to compete. Fidelity is 0% through July 31st. Valkyrie, this is one of the Winklevoss twins at Gemini are custodians of, and that's Burr. I love the fun names here. And that's 0% for 3 months. iShares, iBit is 0.12% for 12 months, up to $5 billion in assets. The VanEck looks like the one is HODL for their symbol, which is fantastic. No fees, or it says none for fee waiver, which is interesting. And then Franklin, this was the multi-trillion-dollar asset under management firm that put the Bitcoin laser eyes as their logo, which is awesome. Wisdom Tree is another very well-known one, and 0% for 6 months, up to $1 billion in assets. Invesco Galaxy is 0% for 6 months, up to $5 billion in assets. And then we have our Hashdex, which is DeFi, which is their symbol, fantastic. And then Grayscale, the 800-pound gorilla here, where they have the most assets under management. I believe it's the second largest commodity ETF in history, and it is 1.5% expense ratio. So this is to make up for all of the expenses that they've incurred to basically push all of these through. They were on the front lines blazing the trail, and these are all of them. These are the ones that are publicly available. You guys can go and check them out on your brokerage now. Search for them, favorite them, add to them because they're very, effective to move some capital into. And I really like how easy it is now to use it. I played around with the one on Fidelity earlier this week. And of course, you can look all of these up. The Bitwise one is really doing some heavy marketing. ARK is definitely doing some marketing. All these are going to ramp up with marketing all over the world, which is very exciting to see that. And their introductory fee waivers are just a way to bring people on, and just know that there will be fees. And this is going to be interesting to see how it plays out for Coinbase as the custodian for, I believe, 8 or 9 of the 11 here, because they make fees on retail, very high fees. I believe it's like close to 2%, 2.5%. And they can only be charging very low for these institutional funds. So what happens when Coinbase runs out of Bitcoin? Will that happen? Who knows? The price is going to reflect the level of demand and the supply here, where 70% of holders are not selling and have not moved for multiple years now. So we will see how this level of demand of capital with this fee structure, how this plays out, but it's going to be a wild ride to watch this. That is it for my overview and update on the Bitcoin ETF situation. I'm super excited for these to be approved. There's so many people out there speculating that some of these big companies like BlackRock have been buying up mining farms and things like that to not move the price of Bitcoin and just acquire it for a couple of years behind the scenes. A lot of this happens OTC or over the counter, and they're trading just all of these assets that aren't actually adjusting the price. They're behind the scenes. So there's a lot going on, a lot of moving parts. I'm really curious about the mechanisms here with, T0 settlement where people are making the trade, it's instantly settling. But with an ETF, you have multiple parties involved where, they have to get these orders and they have to get the assets. They have to put it into the ETF so that the Bitcoin is there. It's just a really interesting logistical situation from an ETF and having a hard commodity that they have to acquire and put there. So really fascinating. It's going to be fun to watch this over the next year, 2 years, and strap up, buckle up, because this is going to be a wild experience. And everybody's talked about institutions being here last cycle, the cycle before that, even the cycle before that in 2013. People were like, oh, institutions are buying. But now they are actually here, ladies and gentlemen. This is a fact. And this is what it looks like. This is what institutional adoption will look like. So it's very exciting and kind of wild to witness this personally after 10 years of watching this be like a hacky thing on a forum and Bitcoin talk and people just slinging 1 to 2 around. I pulled up my Coinbase account from 2015 actually recently, and I was sending around 1 or 2 Bitcoin here and there, and looking at the values now. It's remarkable how far we've come, and I think it's so cool to witness this firsthand. It's very historic, and it's here to stay. It is the flag is in the ground for Bitcoin on Wall Street right now, and I'm super pumped for everyone, whether they're using a Fidelity account or using a Coinbase account. Doesn't matter. First day here, been here for 10 years. Doesn't matter. Welcome to the space, and very excited to watch this space grow. So that is it for this episode. Slap a like on this video if you want to see more ETF style videos, and I will see you here on the next episode.